Thank you for standing by, and welcome to the Cochlear Limited announcement. All participants are in a listen-only mode. There will be a presentation followed by a question and answer session. If you wish to ask a question, you will need to press the star key followed by the number 1 on your telephone keypad. I would now like to hand the conference over to Mr. Dig Howitt, CEO and President of Cochlear Limited. Please go ahead.
Thank you, and thank you all for joining the call. I thought what I would do is just give you a brief overview of the announcement and then open it up for questions. So just starting with the announcement, what we've obviously seen is that with the Chinese Lunar New Year extended until Monday, we've been talking to hospitals right across China, and we're seeing that all elective surgeries are being delayed. And many hospitals not taking appointments for new surgeries. So we, at this stage, don't know how long this will go on. So we've looked back at our experience of SARS as a guide to try to estimate the impact that this could have on our business in Greater China. There are obviously still pretty significant travel restrictions in place in China. Many of our China team are working from home, as those resumed after the Chinese New Year. So with all of that as background, we've had to estimate or have estimated an impact that this could have on our revenue and therefore on our profit in the second half. We've done that in thinking about a few things. One of those is that we will not be making any changes to our cost base in China. So we've been investing in China heavily over the last few years to build out our market presence. We're leaving our people and that cost base in place as they continue to talk to candidates and support our customers up in China. Also, March is typically the biggest month of the year for sales in China. It's a month, ear care month. It's a month where there's significant promotion of hearing loss and awareness of hearing loss, and it has always been the largest month for sales that we have. We have assumed at this stage that there is no impact from the coronavirus outside of Greater China. That's what we haven't seen any impact over the last few weeks, and at this stage we don't expect one. And as we said in the announcement, from a supply chain perspective, at this stage we're confident that our supply chain won't be affected by the coronavirus. In terms of the guidance range, what we've done obviously is reduce the net profit range by between 10 and 20 million. And that's been done solely thinking about what is the potential impact on our sales in China and therefore on our net profit. Keeping in mind that the vast majority of our sales in China are in private pay. That we have, as you can see in our accounts, a pretty strong gross margin across the board, and China is not far different from that. So I'm thinking about the net profit impact. We're looking at, what's the gross margin impact of lower sales net of tax, and that's where we come with a $10 to $20 million range, with the bottom of that range, the 20 million, being a very, very significant reduction throughout the rest of the financial year in China. So I think with that background, I might open it up for questions.
Thank you. We'll now continue with the question and answer session. If you wish to ask a question, please press star then 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star then 2. If you are on a speakerphone, please pick up the handset to ask your question. Your first question comes from Sean Larman from Morgan Stanley. Please go ahead.
Good morning, Dig. Hope you're well. Talk about the capacity within the channel to sort of catch up on these surgeries once people stop being afraid of going to hospitals would be the first question.
Yeah, look, it's hard to know, Sean, at this stage. I mean, there's normally excess capacity. What's a little unclear, though, is quite a lot of elective surgery is going to be delayed. So it won't just be catching up cochlear implants when things resume to normal. So we'd certainly expect to see, when things resume to normal, a rebound and a catch-up. What's very hard to know right now just is over what period that catch-up would take.
Sure. And one quick follow-up. I just noticed that, there's no FX assumption in today's guidance. Is there an FX assumption? And if so, what is it?
No, we haven't put an FX assumption in there. I mean, we've restricted this announcement rightly to just what has happened in China. Obviously, with all our results next week, there'll be details there on what's happening with FX. And I suppose I'll clarify that. Obviously, that we've assumed an FX rate and converting China sales back to Australian dollars, but that's not material in our thinking of the magnitude.
Okay, thank you, Dig. That's all I have. Appreciate it.
Thank you. Your next question comes from David Bailey from Macquarie. Please go ahead.
Yeah, good morning, Dig. Just a couple of quick ones to start with. Just the relative contribution of China to group revenue, and then also within China, you mentioned a high proportion of private pay. Just that number as a proportion of total would be useful to start with.
Okay, so some of those are not numbers we disclose. I mean, China is, as we said, it's a top 5 market. It's part of our Asia Pacific business, and you can see what proportion of our Asia Pacific business is of our total revenue. In terms of private pay, that we've been saying for a while now, the vast majority of our revenue in China comes from private pay or where there's some level of provincial or city level reimbursement versus the national tender, which used to be a significant part of the business. It's now a very, very small part of our overall China business.
Okay. Just working backwards through some of the changes in commentary. If I look at 295 being the midpoint of the previous range, 280 now, it implies, a second half impact from China being 15 million. If I gross it up for a full year, it gives me 30. 30 on 295 gives a contribution of around 10. Is that math kind of right in terms of relative contribution of China to the group earnings?
Let me sort of take you through it. I can see again. Let me take it through a slightly different way. So we've taken obviously 10 to 20 million off our guidance, and that is the range that we think the net profit impact from the reduction in sales, range of reduction in sales in the second half. So very clearly in doing that, we're assuming that we will be losing money in China through the second half because we're keeping our cost base in place and have expecting a very significant reduction in revenue.
Okay. I'm trying to think of how that relates back to the commentary around gross margins being similar to the group, but that could just be a bit of a timing issue. Anyway.
So in normal, in terms of thinking about the impact, it's effectively the gross margin impact, which we then would pay tax on.
Okay.
Because our sales and marketing and distribution costs all continue. That's our people on the ground in China.
Yeah. Got it. Okay, that's fine for me for now. Thanks very much.
Thank you. Your next question comes from David Lowe from JP Morgan. Please go ahead.
Thanks very much. Dick, just a quick one. So would it be right to assume that there's not a material difference between the revenue impact and the volume impact, given we're going to see unit sales as well as dollars? Are they broadly going to be in line?
Broadly in line. Look, in China, and compared to the rest of the business, there's typically lower services revenue and higher CI system revenue.
Right. So I presume, making some allowance for pricing differentials, we're going to see more of a volume impact, a unit volume impact, than we would a revenue impact, but not tremendously different.
Not tremendously different, but that's given the proportion of our sales that are services in China is lower than the average around the world. that's a reasonable assumption.
Okay. And I presume upgrade sales, et cetera, you're obviously alluding to it there, but we're not assuming much of an impact there because they're not material or not significant anyway?
No. So in China, upgrades are typically done through the hospital. So we do expect an impact on our upgrade sales in China for the half, because hospital outpatient services have been significantly reduced, as you'd expect in that
Okay.
What they're focusing on the coronavirus, not on sort of hearing care in many hospitals.
Yes, understood. Changing topics a little bit, the new plant that's currently being constructed, any thoughts on the implications of the coronavirus on that project?
Look, not at this stage. We don't see any significant disruption to our plans there. That's still in the construction phase. But yeah, we don't see any significant disruption.
Okay.
At this stage.
And the SARS experience versus the coronavirus experience is obviously rather early days.
Yeah.
But could you talk through what happened in terms of the way at which patients came back? I mean, were they back in a flood because everything was there was an all clear given, or did it take time for confidence to recover?
Once sort of the things cleared up, it ramped up reasonably quickly, but the volumes, we're going back 17 years, the volumes were much smaller.
Okay. And just last one then, but just moving into speculative territory, if the coronavirus becomes more widespread, so we see more of an outbreak in the West, any reason to think that the implications would be any different in Western markets?
Look, I think at this stage we just don't know. We're certainly not seeing any impact, and it's very hard to speculate on what.
No, I understand. I thought I'd try. I'll leave it at that. Thanks very much.
And given the travel restrictions that are in place, it's obviously all done to limit the spread.
Yes, of course. Thanks.
Thank you. Your next question comes from Andrew Goodsall from MST Marquee. Please go ahead.
Oh, good morning, and thanks very much for taking my questions. I think a fair few of them have gone. I guess I was just going to see if there's any update on the contracts and obviously that and the extent to which they'll be impacted as well, or would they be pushed back as a result of this, do you think?
Which contracts are you referring to, Andrew?
Yeah, just I guess any ongoing central, government contracts. I know they've been sort of dispersed out, but I imagine they're caught up in all of this as well. But just whether if there's recontracting going on, whether that's been deferred as well, things like that. Yeah,
so I think that way to think about that is that typically the drawdown on those tenders is related to the surgery rate, and given the surgeries have stopped, the drawdown of the tenders stopped, so that any new deliveries will be pushed out.
Okay. Terrific. That's all I had.
No problem. Thanks, Andrew.
Thank you.
Thank you. Your next question comes from Saul Hadassin from UBS. Please go ahead.
Good morning. Thanks, Dig. Just a couple of quick ones. Just confirm in the private China market, the ASP for a unit, is it similar to what you achieve in a Western country, say US or Germany? Is there any difference with ASP?
Yeah. So in the private market in China, we have a range of price tiers with different systems at those tiers. The average of those is broadly similar to our pricing across the world. So for the latest premium system, the prices are equivalent, and then we sort of tier down below that, so the prices get a bit lower. But look, it's reasonable to assume it's the average price is not too far off, probably a little bit below, but not too far off the average price across the world.
Okay, and would it be right in assuming that that's roughly sort of low $20,000 per unit?
That's a number we haven't disclosed as what's our average pricing in China.
Okay. And then just one more. You mentioned the 3 months worth of inventory as it relates to the supply of the componentry for sound processors and accessories. if this was to persist, is there any contingency that you have in terms of manufacturing outside of China? What do you intend to do should the manufacturing issue persist?
Look, we're certainly looking at our plans and our options there. As we're talking to all our suppliers, they're confident that they'll be in production, if they haven't already restarted, very soon. So we don't think that is a high risk at this stage. And also, what we're looking at there is components to the external part of the system, and they're, we certainly do have options across the range of technologies and colours and those sorts of things that we have. The implant supply chain is separate and will be unaffected.
Right. Okay. That's all I had. Thanks, Dick.
Thank you. Your next question comes from Chris Cooper from Goldman Sachs. Please go ahead.
Hi, thanks for taking my questions. Most of them have been answered. Just a couple of clarifications. So just to be clear, there's no first half impact you're calling out today, so the numbers that we're going to see next week are going to be entirely unaffected by today's announcement?
Yes, that's right.
Got it. And just a clarification on one of the previous questions, there's clearly a big step up in CapEx this year as a direct result of the efforts to build out the manufacturing facility in China.
Yep.
We shouldn't be expecting, as far as I interpret it from today, any reduction in that CapEx spend for this year or next.
No.
Got it. And just final question, more of a sort of mid to long-term strategy question in China. When you commented a couple of times, the vast majority of your exposure there is self-pay. I mean, it really wasn't very long ago that was a far more balanced picture. Clearly, the pricing has been deteriorating quite quickly on the tender side of the Chinese market. Has that had any impact at all on the self-pay side? I mean, we do see it in other markets sometimes where tenders will drag down the more commercial end of the market. Is that something that's happening? I mean, I know your comments that ASPs are probably equivalent on a sort of weighted average perspective, but has there been a sort of deterioration in that pricing level over the last year or two?
Look, I don't want to answer that one this week because that starts to get into, potentially insight into our first half performance, which I don't want to give, and don't take that as in any way an indicator of what we might say about pricing next week. I just don't want to get into it now because we'll reveal all our results next week.
Okay, thanks for the help.
Thank you. Once again, if you wish to ask a question, please press star then one on your telephone and wait for your name to be announced. Your next question comes from John Deakin-Bell from Citigroup. Please go ahead.
Oh, hey, Dick. I was just interested in you mentioned Taiwan and Hong Kong. So you're actually saying you've seen an impact in both those countries. I note in Taiwan, for example, there's about the same number of cases in Australia. It just is surprising that there'd be an impact there.
There is an impact. So in Hong Kong, public hospitals have stopped CI surgery at the moment. Taiwan has certainly deferring surgeries at the moment. And part of our business in Hong Kong and Taiwan is medical tourism from mainland China. And with the travel restrictions that are in place, those surgeries are clearly not going ahead.
Right. Okay. No, that's all I've got. Thanks.
Thank you. Your next question comes from David Lowe from JP Morgan. Please go ahead.
Thanks for the follow-up. Just with Cochlear, we're quite used to cost management being used to ensure that the profit guidance is delivered and with a fair bit of flexibility, both up and down. Just wondering how we should think about that going forward. I mean, if this continues on, let's say in China for months beyond this financial year, would there be a potential to manage down some of those more variable costs to ensure that profits are less affected?
Look, I think we'd have to see how long it went. As I said, we're not taking any cost management initiatives in China right now. It makes sense to keep all of our people employed and trying to generate new demand. For the foreseeable future, that's what we'll do. I think I can't speculate beyond that. If this runs on for a very long period, what we would do.
All right. Thank you very much. That's all I had.
Thank you. Once again, if you wish to ask a question, please press star then one on your telephone and wait for your name to be announced. We'll now pause momentarily if anybody else wishes to register. There are no further questions at this time. I'll now hand back to Mr. Howard for closing remarks.
Okay, look, I think thank you all for joining, and I look forward to talking to you all next week when we do our first half result. Thank you.